Good morning students, welcome to our educational channel which is special in accountancy. Today we are going to see very important topic and that topic is introduction to company account. On this topic we are going to study the all objectives, all very important objectives. Let's do one by one all the objectives. First one, which of the following is not a characteristics of equity shares? So answer is D. It can be converted into the preference shares. Second, preference shares must be redeemed within a dash year, 20 years from the date of issue of such shares. So 20 years is the time limit. Which of the following is not a characteristics of a public limited company? Answer is D. A public company can be incorporated with the less than 7% and more than 2%. This is a characteristics of the another company. Issue capital is a part of dash, always authorize capital. After this, subscribed capital can be dash more than the call up capital. See this slide. Now, share can be issued by a public company through dash. All the above. This can be issued by public, this can be done by private placement, this can be done by right or bonus issue of shares. So, all three are possibilities are there. So, minimum application money to be paid by an applicant along with the application money shall not be less than that 25% of the issue price. Minimum company should collect 25%. Call in areas shown in the balance sheet, always shown on the equity and liability section as a deduction from the paid up capital. After this, as per the table of Schedule to Company Act 2013, interest on call in areas is payable to dash at the rate of 10% per annum per year. Profit on reissue of shares is the transfer to dash, always capital reserve because this is non-recurring in nature. Shares are issued for cash or for consideration other than cash. So, we can share issue other than cash. Profit on reissue of shares is transferred to dash, capital reserve. After this, the amount of capital actually offered to the public or shareholders called the dash, issue capital. Capital can be called up only in case of winding up of the company, reserve capital. After this, called up capital less than call in areas is equal to the paid up capital. After this, MOA of a private company is a dash, must have minimum 2 subscribe. After this, public company issue its share to the public to the file with the register of the company, that is known as the prospectus, where the all information written about the company's rules and regulation. Capital redemption reserve always can be used to make an issue of equity fully paid up bonus share. So, we can use for the purpose of bonus shares to equity shareholders. Which type of the shares may have dividend in arrears, that is known as cumulative preference shares. The amount to be collected on application of shares should be dash more than 5% of the nominal value of the shares. 5% is very important, it should be collected. Bonus shares can be issued out of, that is called general reserve plus dividend equalization reserve plus investment allowance reserve. All three possibilities can be possible here. So, answer is a D. The maximum amount beyond which company is not allowed to raise the fund by issue of shares is known as authorized capital. Authorized capital gives the maximum capital which can be collected from the company. Puja Limited forfeited 20 shares of ₹10 each, on which 5 per share were paid up. The company issued these shares at the rate of 8. Fully paid up amount transferred to capital reserve will be dash. So very simple, what you have to do? You have to do 8 minus 5. So how much reissue 8? How much we got? 5. So how much we did not get? 8 minus 5, 3. Now 3 into 20, how much? 60. So answer is 60. After this last one, Alpiksha acquire means purchase asset worth of 7,50,000 from H Limited by issue of shares of rupees 100 each at a premium of 25%. The number of shares to be issued by the Alpiksha Limited to settle the purchase consideration will be dash. So 6,000 shares going to be issued, and this is working note. 100 plus 25, 125 amount, total amount divided by total issue price is equal to 6,000 shares. All the best for your exam.